Well, welcome to another episode of Insurance Gone Wild. I'm your host, Dennis Settlemoir, and my lovely, talented, and beautiful co-host is...
Stephanie Lencioni.
Stephanie Lencioni. See, I did it.
You did a very good job.
I did it.
I love it.
And, man, here's so much has happened since the last time we sat down and did a recording. So much stuff we have going on at the agency. We won't get into all that, but I think today that we had decided we were going to we're going to talk a little bit about a particular type of health insurance that we offer.
Yep.
Which is a little bit different than your traditional health insurance, but still very, very good health insurance. So.
It's a great alternative solution for those where it's a great alternative solution.
I hear you. And we're going to dive into that a little bit. So in the past, for those that have been watching our podcast, is that we talked about we had an episode where we talked about the different types of health insurance.
Very briefly. We kind of touched on
a little bit,
the differences.
So we got HMO, which you have one doctor who is your primary care doctor. PCD, I think is how they do that. Isn't it primary care doctor?
PCP,
primary care provider. Yeah. Yes. And everything has to go through the primary care provider. You have to get referrals and all that stuff. And you hope you have somebody in your network that's decent, that they can refer to you, that's near you. You don't have to travel 100 miles to see an eye doctor or something. And then we have the PPO, which allows you basically to see pretty much anybody. It allows in-network freely, right? So as long as any doctor is in network, that's fine. You pay the lower prices. But you do have the option to go out of network. It's just at a higher rate. Yeah.
But again, it's freedom of care. You basically get to set the appointment and you're good to go.
And then there's EPO, which is, what is that, sort of a blended?
Yeah, it's the MUT. So not every carrier has EPO, but EPO is where you cannot go out of network. It usually is a larger network than HMO, and you don't have to have that primary care physician designated. So if you want to go to the specialist, then you can. And just FYI, there are some specialists that they are just so specialized that they do require a referral regardless. So you know, like a neurologist, just certain
neurosurgeon.
They're not
going to see just anybody.
You're not going to get a walk-in appointment.
Yeah.
Like, hey, so I have headaches, and they're like, cool, go see someone else. But but like orthos and things like that, you can just walk in and see those.
And then there is this particular one, which we were going to call a health sharing program.
Yeah, because that is what it is called.
Yeah. So Stephanie, who handles all of our health insurance stuff, if you ask me about health insurance, I have about 10 minutes of stuff that I can rattle off to you. And if you ask me any more questions after that, I'm not going to know the answer to, even though I'm licensed.
You are.
I am licensed in health insurance. It is just a different world, and I don't keep up with it. But Stephanie does, and so we're going to talk a little bit about health sharing. So the big one that's out there that people would be able to relate this to is the MediShare program.
Exactly.
And we had talked about in the past. We've talked about that's sort of the Kleenex of facial tissue.
Correct.
Right? Puff is a facial tissue. Kleenex is a facial tissue.
Yeah, but it's like, hey, will you hand me a Kleenex?
Yes.
And it doesn't matter what the brand is, but it's just everything is a Kleenex.
Exactly. And that's sort of like MediShare.
Exactly. Yeah,
so
that's exactly right.
Just think, if you know anything about MediShare, heard anything about MediShare, this is in the same category, but it's not MediShare.
Not MediShare.
But it is in the same category.
Correct. It is, yes. That is a health sharing program, just like what we're about to talk about.
So let's start out. Let me ask you this. Tell me a little bit sort of how just the basics of health sharing versus traditional insurance works.
Yeah. So first and foremost, and this is where we lose a lot of people pretty quickly, health sharing is not insurance. And they're like, whoa, I don't know if I like that. And then we'll dive a little bit deeper into that, where it really is a positive thing. But health sharing, what with your traditional, let's say healthcare.gov, maybe employer benefits, things like that, you don't have any pre-existing limitations, right? So you sign up for healthcare.gov, you go on there, Blue Cross Blue Shield, blah, blah, blah. You have stage 4 cancer. They're going to treat you all good things. No problem. With this, there's a 3-year, you can't have been treated for something for 3 years.
Look back. We
It's
call
3-year
that
look
in the
back.
insurance.
There you
Yes.
go. Yep. Where they're not going to cover a catastrophic event that occurs based on something that has been existing in treatment within the last 3 years.
Okay.
However, if you don't have any pre-existing, you're good to go, right? Then there's no issue. Another difference is the prescription coverage. So with your traditional health insurance, you've got, to be quite honest, depending on the plan that you have, you either have really good prescription coverage or it can still be garbage, but it's still traditional health insurance. And then over here with the health sharing, you absolutely, there is no prescription coverage. It's really just a discount program. So one of the examples we talked about off camera was, I've got a friend that she goes to the doctor 2-3 times a year, like nothing. She barely goes to the doctor. So her medical expenses are really low. Her prescriptions, because of what she has going on, are literally $20,000+ a month. Prescriptions. Not a good plan for her.
Not going to work for her.
It's just not going to work. Not going to work. So again, know the limitations, understand the different policies and things, even though, again, not big medical costs, but because the prescription coverage isn't there, this is not a good plan for her.
All right. So you've given us a couple of negatives. What are the other negatives before we get into the positives as to why it's a good plan? But what are some of the other negatives to it? Can you think of any?
Yeah.
Did I put you on the spot a little bit?
Yeah. So I think another negative is not everyone is it's
qualify.
still not super well. So everyone qualifies. And I think when in conversation, I kind of flippantly have said like, oh yeah, don't qualify, blah, blah, blah. With this one, it truly, anybody can get on it. Even if you sitting here in front of me right now, you've got stage 4 cancer and you want to get on this plan, there are no questions that are going to knock you out. You can still get covered. They're just not going to cover the pre-existing, right?
Okay.
So everyone can qualify, but just doesn't make sense. I think a negative is even though health sharing and your MediShares and your other ones around have been around for, decades, it still is it's not the norm, right? So it's different than the status quo, and that makes people nervous. When you go in to the doctor's office and you present something that is different and somebody who is getting paid $15, $20 an hour, and they just, I'm taking my Blue Cross Blue Shield, I'm looking for United, I'm looking for Aetna, those buzzword carriers, if they don't see that, then maybe they're like, we don't take it, right? And so that can be a negative where it's like, oh, well, I bet nobody takes it. When in fact it's a positive, because with health sharing, there is no network. So you don't have to stay within any certain confined pre-designated contract, anything. The one thing that I did recently hear about, so we're in the Dallas-Fort Worth area, as if you guys have listened at all, you know this, but Dallas-Fort Worth area, Cook Children's is huge on the Tarrant County side of things. Children's is Dallas, but Cook Children's is huge on the Tarrant County, and they do not accept this. So before, when you and I were talking, I was like, oh, it's not a matter of does your doctor take it or not take it. It's just a matter of saying, hey, this is what I've got. This is what's, blah, blah, blah.
But do they take any health sharing?
None.
Okay, so it's not just this program.
Correct.
It's any MediShare, any of the other ones that they're going to take it.
It's any. And I'm going to tell you, I heard that and just some other things. And my kids, that's where my kids are part of the Cook Children's Network. Our pediatrician, we absolutely adore him. He is fantastic. We unfortunately have had the history with all of this, but we've had quite an extensive history in some complex issues in the Cook Children's Network with one of our children.
Thing one.
And then so we've had a lot of dealings with them, and they do a fantastic job in a lot of ways, but just there are some things where I'm like, gosh, interesting. I mean, it is a business, and I understand that it's a business, but it's just like, And then hearing that they wouldn't accept a health sharing, I'm like, so you guys really are in it just for the money then? You're in it just for not the doctors, right? And I don't want to hold it against the doctors, but the whole organization as a whole.
Organization, yeah.
And we've talked about this before. Insurance is not a nonprofit. It can't be a nonprofit. They have to make money. They have to pay your claims. But I just thought, wow, I mean, to put such a hard stop on, we will not accept a health sharing program. It just kind of makes you just as a parent, and the things that I know, it does make me kind of.
So that's one of the things you're going to ask people if you're talking to them. Do you have kids?
Do you have kids? Do they go to Cook Children's? Yeah. Boom. Other than that, though, we have not heard of any other place that has just an absolute hard stop on. No, we do not accept this.
Yeah, but this is a side note because I think we talked about this previously. You have someone who audits hospitals, and like 20% of the patients pay.
Let's say 80. I said 100, but let's say 80%, right?
80% of the bills for a hospital. So why would they not accept health sharing if like any health sharing, this program, Medishare, or one of the other 15, 20 that are out there, they're still getting paid. So I don't understand why I guess they've had, who knows? I mean, we make decisions based on experiences that we've had as business owners, right?
Right.
Hey, we're not going to work with this type of industry or whatever because of ABC.
The stereotype.
Yeah. And it may be that there's really nothing wrong there now. Maybe we don't know how to work with them. Or maybe we had a bad experience and like, we're never doing this again.
Yeah.
I mean, we don't know. So
and that's fair. So whatever their reasons,
beating up on Cook's Children's a little bit, but
a little
whatever.
But but that is one thing.
But they're a great organization. Other than that,
I'm not saying anything negative.
Yeah.
Whatever the case is, that is the only one that we have heard of. So typically, so that would be the negative. People are like, oh, well, what about networks? What about networks? I'm like, yeah, again, there are no networks. So all people say, well, what does that mean?
So let's flip it to the other side. We've heard 3 or 4 negatives. Why would people even be interested in this? And I know you have some examples of where it did pay really well, but why would people be interested in something like this, a Medishare program? Because I know people that are on Medishare, and I probably need to introduce you to some of them to see if this one would fit them better.
Yeah.
Because they're probably...
And we don't want to keep saying Medishare.
I keep seeing Medishare.
Sharing.
That's the Kleenex version.
The Kleenex. And even you, like,
yeah.
Proving the point that they have they've done a great job.
They've done a great job marketing that. Health sharing network. The thing with Medishare, it's very faith based. You have to sign a statement of faith, I think.
You do,
if I remember,
absolutely,
and some other things that may keep some people from wanting to be on it. But a health sharing network is just different. It is not insurance, which has a positive to it.
It does.
Because they don't have to abide by all the crazy laws and rules and regulations. And in most cases, it pays the same as health insurance would. Is that a fair statement?
I'm going to say yes, based on where I think you're going with that, but ultimately yes. So it acts as a major medical plan.
Okay.
And that's the key, right? So taking away from any of the pre-existing stipulations, and this is where I'll just jump in quickly to...
The pre-existing is a negative, which we have talked about.
It's a negative. Absolutely.
Yeah, it's a negative.
But do you know what else is a negative? $1,600 for one person. Because they're per month because, and then they still have a $9,100 deductible and max out of pocket because they're on a plan who takes everybody with pre-existing or non-pre-existing.
Exactly.
And it's just based on age.
All right. So let's move on to what are the positives about this plan?
Everything. I'm just kidding. No, not everything.
Let's start with one positive about the plan. What's the
premium?
Premium.
We'll go right to like chop off the knees, premium, 100%. So we have a client, and one of the questions that was asked that we've talked about, can this be for individuals, like individuals and their families on a, individual level, and can it also be for groups? So employee benefits groups, like a business offering it to their employees. The answer is both, right? So this goes into the example where we have a client that we can offer both, because remember, this is not insurance. So it acts as a medical plan, health insurance plan, even though it is not technically insurance. While over here, you can have your traditional health insurance plan for those who maybe have the pre-existing and different things going on. We have a client where so it's family coverage. They were paying $3,200 a year. And this was even on the plan.
$3,200
a month. Thank you.
That's
a month. $3,200 a month in premium. That's before anybody goes to the doctor at all. We switched them to this plan, walk them through the whole thing. Doesn't cover the pre-existing. If you have high prescriptions, we are saving them over $27,000 a year in premium.
Wow. They can buy a lot of prescriptions for $27,000, right?
You can do a lot. I don't know what to do with you right now.
I don't either.
I think I
I'm
don't know
glad
what to do
we've
with
got Mascot here too.
I know Devereaux's the best. Hey, sweeties. So 27 over. I'm not rounding up to 27,000. I am rounding down, and again, that's before a doctor is ever seen. And then from there, so premium 100% is the number one benefit, if it can make sense. Number two, it really does. It'll lower your out-of-pocket exposure. So from a family basis, they were at an $18,200 max out of pocket if something were to happen.
Oh, that's crazy.
So you're spending. So the savings.
You're paying $27,000 plus $18,000.
More than that. That's the savings.
That's $47,000.
The $27,000 was the savings.
Oh, that's right.
That was just the savings.
Yeah.
So you're talking, and I'm going to look this up.
How much were they paying? You said you were paying $3,200 a month.
$3,200 a month, and I can't do that math.
Which is
38.4.
Yeah.
And it was actually over 3,200 because whatever it was like 40,100. So it was like 32 and something. But let's call it 38,000 plus
the 18,000.
The 18.2. So your exposure is $56,000 a year for a family.
Wow.
That's incredible. That's criminal.
That's not incredible. It's nuts.
Well, but that's but like incredible in the worst way, right? Like that should be criminal. And it's a family of three. It's a family of three. Now, to be fair, it would be the same if it were a family of five.
Were there pre-existing conditions?
No.
Well, we know what we would say about that. They were getting, yeah. It was not nice what they were getting done to them.
Nope. So there's that. Because again, and
they could afford it. I'm acting like an individual now that's talking to you, a consumer, going, they could pay for that? That is insane.
Yeah. Yeah. Now,
almost $60,000 a year before insurance would even do anything.
Before insurance does anything.
And I can't say, but it was cheap, because it wasn't cheap.
Now, is $56,000 better than $500,000 because we had a catastrophic event?
Yeah, but
100%. Like it is.
You gonna put a second mortgage on your house to pay for your.
Yeah, you're talking about $40,000 before anybody steps foot in the doctor's office. Now, is that for everyone? No, not necessarily.
No,
but these people don't qualify for a tax credit. They were on a PPO versus an HMO.
Yeah.
Because they could afford so it's the premium is the number one. But here's the thing too, and we talk about this all the time. It's not about just cost. Cost matters. And cost matters even more so right now because stuff is tight. We're in a totally different, like we're in an economic struggle where everything has gone up. right?
Yeah,
Like,
we're getting hit from everywhere. I say we in universal stand, we're getting hit from everywhere.
Everywhere. So we get that. It doesn't mean that you cut cost in the wrong way. Like you still have to be strategic about it, right? Like, can you maybe cut out the case of beer, like 1 case of beer per week? Sure. That's a good cut. I know that's offensive.
You're getting a little personal there. Actually, I don't drink
right
that.
at you for that. Sorry about that.
Actually, that's not
a bottle of bourbon.
No, let's talk cigars, maybe, but not alcohol.
Like that would be a fine. That would be a fine cutback.
Yeah.
But you don't just want cheap and inexpensive.
Yeah.
That doesn't equal. It doesn't necessarily equal good, right? So, but premium's the good thing. And then as far as the coverage, what's going on?
I'm just going back to the $60,000. That is just insanity.
It's insanity. Yeah. One family. It's one family. And then you do that. I mean, it's just, it's a lot. So
for 3 people.
3 people. So the other benefit is going back to the no network. So there is no network.
That can't be normal. I'm sorry. I'm just $60,000 before it picks up. Well, it's not even going to pick up anything, but that's the max out of pocket.
That's the max out of pocket.
So if you have a major event,
you have a major event, then 56 is great.
Like one of my daughters in a bad accident. It was a major event. I don't remember what the hospital bill. We hired it was a car accident. We hired a lawyer to help negotiate all that, and it didn't cost us a dime.
Well, it did on the back end.
But
as a former claims adjuster, I'm like, oh, it did on the back end.
But anyway, it just, we hired a personal injury attorney to take care of that. They knew how to negotiate all that stuff. But it was $200,000-$400,000 for her to be in the ICU for like 10 days or something.
And that's not counting the physical therapy.
Yeah, and her ongoing issues that she still has from it. But man, that's just. Anyway, I'm sorry. I keep going back to that. Yeah. But anyway, all right. So let me move us on. So the thing is, number one is the premium.
That is first and foremost.
So can you tell us what this particular family is paying now?
I believe it's $784 a month.
And what is the max out of pocket on that?
It's a $2,500 deductible and a combined $5,000 max out of pocket for the family.
Jesus.
So essentially, we went from $18,200 to $7,500.
As my Spanish friends would say, Jesus Cristo, that's crazy.
And your business partner, because I say that all the time.
But you say other things too, but we don't repeat those usually.
I do. I say a lot of things.
Wow, what a difference for $700 a month versus $3,200.
$3,200
and max out of pocket. So let's say that they didn't have any pre-existing conditions.
Okay.
Let's say they were an accident. That would be their max out of pocket, right?
$7,500. Yeah, wow. And then of course, so it goes.
All right, so let's go to what's another benefit?
So another benefit is other health sharing plans will do what's called and I don't want you to get in the weeds on this, but just know they'll do.
Oh, I'm getting in the weeds.
I know, don't do it. They'll do more of a reimbursement situation where you have to go and then you have to file your claim after you pay, and then you have to get reimbursed, and it's this whole roundabout, blah, blah, blah. And then you end up and you're like, it's such a pain in the ass. I'm not going to file my claim. I don't care. And so you end up paying more than you really should be paying, but it's cheaper, right? In the long run, even if you don't file a claim, if you don't have a major event. But it's just it's a pain, right? It's not fun to use. That's not a feel good. What this company, the one that we offer, you call the number on the back of the card. Right. And you're like, hey, in non-emergency situations, call the number on the back of the card and say, hey, so I'm looking to go see Dr. Smith over in Colleyville. He's an XYZ type of doctor. Have you guys worked with him before? Have you billed him before? And they look in the system. Oh, yep, absolutely. Dr. Smith, he's in there. We're good to go. Just show them your card when you get to your appointment and you're good to go. Right. And you'll be billed that lower amount, the correct amount when you go. And so there's no reimbursement. There's no back and forth. Or you call and you say, hey, Dr. Smith, Thursday appointment, and they're like, oh,
we don't know Dr. Smith.
We have not worked with Dr. Smith yet. Not a problem. We'll go ahead and call prior to your appointment and get everything set up for you. So that way, when you do go, you just show them your card. They'll bill you appropriately, which is huge. They handle all of the billing stuff. They review the bills on the back end. So,
okay, I was going to get to that. So that's a big deal. So let me preface that with my question. So what happens if you've ever been to the doctor and had a bunch of stuff happen, or you got a bunch of bills, you're looking at that going, I can't tell what I've been billed, what I haven't been billed. And because I think I had mentioned previously that I have a friend whose dad was in the hospital, and they had to get a spiral notebook and write everything down and go through it line by line and say, what have I been billed for? What have we not been billed for?
Because they keep sending them.
And so, exactly.
Crazy.
But this company goes through those, whereas most companies say they do, but they don't really.
They don't. So, so we'll touch on that. So,
okay.
One of the situations, we've got a major example, and then we have a more minor example.
Okay.
We'll do it on the minor level. So the minor example is we had a client that one of the members, and it's not one of my clients, but one of the members of this organization, she went to go get blood work and didn't call ahead. No big deal. It was like $157 for the panel, like, lab panel, whatever. Not a big deal. Not outrageous, right? Like 157. To me, I'm like,
some people it's a big deal.
To some people it's a big deal, but in my head, I paid $600 for a freaking X-ray. Like, Jesus, I don't even want to talk about it. Again, Cook Children's, stop it. But they, and I went somewhere else and it was a $30 copay. Can't even, again, I say I can't talk about it and then I keep talking about it. That's all I got. But the blood panel, $157. They go in.
That vein right there.
I love it. They then turn around and then the company, our health sharing company gets a hold of it. They review it because they pay based on, and this is a little nugget, reference-based pricing. All that means in a nutshell is basically it's fair market pricing, right? That's it. Just in a very simple layman's terms, I'm stealing that from my mentor in the health sharing space. And she's like, essentially it's an easy way to say is it's fair market pricing, right? So they can't charge you $300 for a Band-Aid, right? Okay. So they took a $157 lab bill and brought it down to $27. And they're like, oh, by the way, here's your $130 refund because you overpaid. It should have only been $27. On a small, everyday, people get lab work scale, right? On a large scale, we had a client, major heart event, went to the hospital, was in the hospital for 6 days, ended up having a pacemaker and defibrillator installed. Installed, is that the word? I mean,
that's the word I would use, but yeah.
It's not a garbage disposal.
Implanted.
Yeah. So surgically put in, right? 6 days in the hospital, all the things, $180,000 bill. They knocked it down to $53,000. Out of that $53,000, they have the $2,500 deductible. Mm-hmm. And then after that, by the way, it is a 90/10 coinsurance, which means so after they hit the $2,500, the company is now paying 90% of every dollar that gets billed. And the member, the client, is only paying 10%. So is
there a max out of pocket?
$5,000.
So
it takes 50. So once you hit your deductible portion,
they ended up paying what, $5,000 to $7,000 total out of pocket.
$7,500.
Yeah.
Now that basically wiped out the $53,000, but it took $53,000 of medical expenses to hit the max out of pocket. That's a catastrophic event.
Whereas with the other people you talked about before, they would have just broke even that year. At $56,000.
Yeah. Well, yeah.
They'd have been PO'd.
Exactly. And they would have paid all of that. because the traditional insurance
They'd be making
companies,
payments on that, most people.
Right. But it doesn't seem like they really whittle it away. So here's the other example, because like you talked about, the bills end up coming in just different waves and all of the things. And when you have a hospital visit, you have the hospital stuff, and then you have doctor's bills, and then you have radiology bills. And so everything is its own separate entity when you're getting billed. Right. So then you for sure have no idea what the hell you're paying for and what you're not paying for. And I feel like they do that on purpose. And it's kind of, to me, it's bullshit as far as I'm like, there's got to be an easier way, because it's not our job to read billing.
Maybe central billing type program.
So an after the fact bill came, and it was $3,165. So $3,165.
Okay.
After this company, the health sharing company, reviewed it, it was a $29 bill and some change, because specifically you've got the reference-based pricing, which is a nice factor. They had double billed so much. Because I'm like, that doesn't even make sense. How do you go from $3,200 to $30? What? And they're like, yeah, because of all of the double coding and the double billing that's happening. And so the lady asks me, and she's like, do you think, like, with your experience and the other stuff, like, do you think this is common?
Oh, yeah.
And I'm like, yes.
I think anybody that's been to the hospital and gotten bills like that go, yeah, it's common.
It's absolutely common. And then,
because it's confusing. I think they do it intentionally.
And then she was like, well, do you think that the major medical, like your Blue Cross, your United, your Aetna's, all of those guys, do you think they review? And I was like, I'm going to tell you, I don't know for sure. So that is my disclaimer. Like, I do not know. I cannot state for certain, but I have to imagine, no, they don't review. Yeah, like this, because providers then would cut the crap and they'd stop doing it.
Exactly. That's where I was getting at. I was going to say, let me pretend like I'm a consumer and go, no, they don't look at it that close, because
why would they still bill $3,200?
If the doctor's office is billing $3,200 every time, which we've talked about this before too, they have to bill higher amounts so they get paid the amount they need to get paid. It's a game, right?
It's a racket, yeah.
And if the insurance companies if the doctor's office just bill what they need to bill and the insurance company just pay what they need to pay, it would be a lot easier. But there's this game that goes on. So to have this company that we have access to, that we write stuff through, to be able to go through and understand that is huge. So even if they hadn't hit their deductible, they're looking at a $3,200 bill, and the insurance company looks at it and goes, yeah, it's really only $29. So now I only have to pay $29 because I haven't even hit my deductible. I'll pay you $29 all day long.
Well, and so let's go a little different direction too, though. They have hit their max out of pocket. So there's a little bit, just because she's in the business, this specific person that we're talking about, they're in the business a little bit. And so she's thrown off, but think about, they have hit their max out of pocket. What if the company just pays the $3,200? What does that do?
Huge amount of profit for the whoever's billing.
Well, but what does it do to the company who's covering you?
Oh, it puts them in the hole.
Puts them in the hole, and then what happens to you as the consumer?
Premiums go up.
Your freaking premiums go up.
Exactly.
So it's this whole trickle effect. It does matter. It matters what the companies are going to pay the providers. It matters if they're going to pay 17 times for the same freaking code that some jackass put on a freaking bill.
All right.
So it matters.
Let me move us on, as we're running out of time.
Sorry.
But no, I hear everything you're saying. So we're talking a lot about individuals. But this can be used with groups also. And I remember you telling me, and I'm going to preface this and you can go into it a little deeper. If you're a group and you need to offer health insurance, this does not satisfy any Obamacare type laws whatsoever. You have to offer at least a Blue Cross Blue Shield, Aetna, or what is the other, United Health, or so you have to offer something else out there that hits that. But you can offer this also, and explain that a little bit.
Okay, so essentially, if you do hit that 50 full-time equivalent employees, right? So if you are below,
we've defined that in the past, but 50 full-time equivalent.
If you are below the 50 full-time equivalent employees, then you can just offer this, and that's fine. right? Because you're not
you don't have to worry about it from the group. Yes.
But if you are what's considered, 51 plus, all the things, then no, this will not satisfy that. So you do have to offer both. But again, you can, because it's not technically insurance. So it's not a competing product. So what you could do, we have clients where we're offering the traditional health insurance, and the portion that they're paying, because the employer has to contribute a portion for traditional health insurance. You have to do, in the state of Texas, it is a minimum of 50%. But then you also then get into this equation where it has to be affordable and We're not going to get into that. So let's just say nitty gritty of everything is, in this example, we've got a business owner offering $400 per month per employee for a health insurance plan. If they go on the traditional plan, it's still, this is real life example, it still is costing their employees anywhere from $150 to $300 a month, just for employee only. And nothing is contributed for their for the family. On the health sharing plan, the employer now is saving money because none of the plans were $400 a month for employee only. None. And in fact, some of them were able to carry family coverage for less than that. So now what has he just done as an employer? You've locked them in and you've given them a benefit that they can't get anywhere else. They're not getting it from another small employer, like 20 under, all the things. So it can be used complementary to each other. And it's a great, like I said, alternative for the people where it makes sense to have.
Yeah. So if you're an employer, this is something you should at least look at.
Oh, for sure.
It may not fit your situation, but you should at least look at it. So give us a call on that. This program has been very, very good. You mentioned the 180,000 down to 50 something thousand, and it paid for it. All up to their out of pocket limit that they have set on. Every health insurance program has an out of pocket limit that's the most you're going to be out of pocket, and then they pick up the rest. But it is a tremendous program. It is something to look at. And I will say that historically, and maybe we mentioned this at the beginning, I can't remember, but you have not always been a fan of health sharing programs because of the way they pay and some of the particulars about them.
Yep.
But this one, you like.
I like it a lot. I've been like chomping at the bit as you let you talk. But we haven't talked about it. I think that was off camera that we were talking about it. But that is something truly to note, is that I've had the ability to do the things I need to do to sell Medicare and offer Medicare. I'm sorry, not Medicare, Medishare. And I'm not dogging Medishare. I'm just saying that me personally, I was not bought in with just the nuances.
Yeah, and what little bit I know about it, it's not been, I'm like, there's got to be something better out there. But people buy it because it's cheaper.
And it is. And again, if you're willing to be organized and do your billing and do the receipts and do the reimbursement, that's fine. There's not a knock. Medishare has filled a really great gap for a while.
I agree. It's not a horrible program, but there's better out there.
There's different.
Yeah.
Right. Whatever you're, because I don't want to dog them, but but this is one that I am excited about. I have no issue offering it. And that's part, just with anything that we do, if we don't buy into it, it's real tough I'm not going to present it to a client. If I can't get behind it and buy into it, it's just, I can't do it. I have to sleep at night. I have to feel confident about what I've just done.
I get it.
And this is where this one I do. So different strokes, different folks, that's totally fine. But this is the most feeling like a true traditional health insurance program that people are used to. So it's that familiarity. It's not like super, super, just totally different program.
But it sounds like to me the biggest negative is the lack of coverage for drugs and the fact that you can't have a pre-existing condition.
True. So the only we're going to touch on one thing and then we'll go ahead and wrap it up because I know we're way on time.
Yep.
So two things. Number one, the gentleman we discussed who had the major heart event that has the defibrillator and pacemaker and all of that, he is still going to be totally fine on this plan, and he will continue to be okay on this plan. He will not get kicked off of the plan. They will cover all of the things with the incident and anything related to the incident because it wasn't a pre-existing prior to him getting on it. That's huge. And that is different than other plans, underwritten plans that we've talked about. The other thing is there is a time that this doesn't make sense any longer, where if prescriptions if somebody ends up getting diagnosed with a disease or an ongoing condition where the prescriptions do exceed the cost savings, that's when it's time to get off. But you can always then hop on an Obamacare type plan, a healthcare.gov. You jump back on your employer plan, whatever the case is. Okay. But those are the two. So to note, he will not get canceled, right? Which is huge. That's a big fear. Like, okay, great. They paid for this event. And then what? Now I'm screwed and I have to go pay expensive health insurance again. No, he's still covered. But again, if you end up coming down with something that is heavy prescription cost, then that's when we need to evaluate and say, hey, does this still make sense?
Sure.
Maybe not. I don't know. But yeah. Okay. So that was just little things.
Well, I think I still have questions around it, but we run out of time. But I would tell you guys that are listening that if you have questions about it yourselves or want to learn more, give us a call, 817-753-0093, or email us, contact@igwpodcast.com. Stephanie would love to talk to you about it and give you even more information on it. See if it's a good fit for you. I think that's one of the things that I like about the agency that we've created is we know this. Not everything that we do or offer is a great benefit. We don't have a problem telling you that, and because our goal is to help. We want to do things with integrity and educate our consumers and things like that, so you can make the decisions that you need to make for yourselves. But it is a great program. It is different. It's a little bit different than even regular health savings. And it's a company that's been around, and we'll probably, we don't anticipate they're going to be around for a while because of the way they do things. And so give us a call, again, 817-753-0093. And we look forward to hearing from you and speaking to you again during the next episode. Thank y'all. Bye.